Welcome back. It's March 6th, 2025. Group C released their dividends. And of those, one of them was CONY. And I thought I'd take the opportunity to look at CONY and compare it from the perspective of over the history of this fund, how it's performed if you took the dividends and kept them in a checking account, or if you reinvested the dividends. And then finally, I wanted to compare it to actually owning the underlying stock of Coinbase. So I guess to start, just as a quick summary, so CONY is if you go to the YieldMax website and you look up CONY, it is the YieldMax on that space with the underlying of Coinbase shares. And it has been pretty good performing despite looking at the NAV. Somebody, if they were just look at the NAV, would think that it was poorly performing fund. However, you look at this, I guess its inception date was August of 2023. And if I go to Yahoo Finance here and just look at let's go 5-year chart, or if let's go 1 year, there we go. It had an inception price in 20s. And as you can see, currently it's trading at 943. That's as of March 6, 2025 here, near the market close. So it's down over 50% from a NAV perspective. Whereas I guess if we look at Coinbase itself, and this is from August 14th, going over to Google Finance, because Yahoo Finance for some reason is being a little slow for me. But so looking at it from August 14th of 2023, right in this area, I can't get it perfect, but it's about $80 a share to $214. So clearly Coinbase, the stock, has, I don't know what over 200% return, 80, 160, I guess not over 200%. 80 to 214, we got over 100% beyond 160, then even beyond that. But overall, I guess on a comparison basis, Coinbase has done quite well. The CONY stock price, the ETF itself, has lost quite a bit from a NAV perspective. That said, I did take the data. CONY has paid a rather substantial dividend. As you can see from performance, I'm on the wrong page here. But if you go into the actual distribution details, the distribution they've paid since October of 2023, you can see the totals here, over $1, basically the whole duration, reaching a high of, I think it even reached, can't see the high, it's almost reached $3 a share. I don't know if it went over that at one point, but we got $2.79 here. We got another $2 one here, even as the NAV erosions hit it. The dividend's been quite substantial. So I think sometimes people lose track of what the cumulative effect of those dividends is over time. And then when you get the dividends, you have the option to just keep it into a checking account and other assets, or reinvest in the actual CONY stock price itself. I guess another option, if you took some of your dividends, you actually put them into the underlying stock. That might be something you'd want to think about if you wanted to avoid some of the NAV erosion. That said, I took the data and I basically made this Tableau dashboard here. I will put the link down in the description if you want to check it out later. But basically, I guess I got, what do we got here? 1, 2, 3, 4, 5 illustrations. And the first one's, here's our distribution per share. So I basically just want to put in graphical format of how big the dividend's been. I could probably add a percentage basis to show what percentage of the ETF price that these dividends represent. But you can see there's been 1, 2, 4, 6, 8, 10, 12, 14, 16, 18 dividends or distributions paid out. And here's what they look like from a magnitude perspective. And then I got this all into a dashboard here that has everything. But I'm trying to think where to start. The first part is, if you were to taken the dividend and reinvested it, you go to this and you wanted to just see how many shares you would have right now. So assuming you started with 100 and you reinvested the dividend, the initial amount was 100. It's not actually shown on this graph. I started the graph following the first distribution, but you can see you'd go up to 106, 111. And then right now you'd be up to almost 400 shares. That said, there has been some NAV erosion. So clearly, as you've gotten toward the end, you've been buying more shares with the distribution as the share price has been lower. But your share count over that time frame is almost gone up by a factor of 4. That said, that doesn't necessarily equate to your monetary performance. But in this price plus cumulative distribution graph here, this one I wanted to show. So this is, let me just zoom out a second so I get everything in here. There we go. So the blue here shows the closing price of the ETF based on the date, and the yellow shows the cumulative distribution one has received for owning the shares during this duration. At the very end here, I don't count the closing price until the end of the ex-dividend date. So therefore, at the very end here, we don't got the price yet. That will populate in once the ex-dividend date goes by. So I think at market close today. But as you can see at the start of here, most of the value of your cumulative value is in the ETF price or the CONY YieldMax fund, and a small portions in the dividend. But as you progress, you see this dividend or cumulative dividend amount has risen substantially, and it has become worth quite a bit more than the actual ETF fund itself. So this, I like this chart because it really shows how big that cumulative distribution can be. You can see as of right now, assuming you get the dividend that was just announced, you'd have a cumulative distribution of $27.53. So just the cumulative distribution itself is worth more than the entire ETF price was at inception. So even with the ETF NAV erosion, you're doing quite well on the investment. So these other graphs are just other ways to also look at this. So this all variables chart here, this just breaks down the different lines. So the way I'd look at the price, if you're trying to compare these YieldMax ETF funds to an actual non-dividend paying stock like Coinbase, you'd want to look at this green graph here because this shows the price of the ETF, which is also plotted here in blue, plus the cumulative distributions received. So those two lines added together basically makes up this green line. And this red line here just shows you the dividends or the distributions on a monthly basis. So you can see if you started with 20, you're currently sitting here at 38, almost 40. So looking at almost, what would that be, 100% return? A little bit less, but that's since the inception date, that's the return you're looking at. And then I got one more chart here, X date. So I guess X date's the X axis, but this compare chart. So I often see a lot of questions on social media asking, how do these CONY funds, these YieldMax ETF funds compare to, I see two questions, like what's the difference between not reinvesting your dividends and reinvesting your dividends? And I think this will probably change for each YieldMax fund. I intend to make these charts for each YieldMax fund because I got it automated through a Python script and pulling the data over here to Tableau just to make it a little bit more visually appealing. But so this compare chart here, we got blue line is non-reinvested dividends. So if you started with 100 shares, so $2,000 at the inception and bought it, the blue line represents what your return would be right now, assuming you took all the dividends, just put them in a checking account. So part of your return would be the actual dividends in the checking account. And the other part of the return would be the remaining that you have left as far as your 100 shares times the current net asset value of the CONY ETF. And you see, you'd start with 2,000 and right now you'd be around 3,800 or about 3,900. Whereas if you took the dividends and reinvested them into CONY, you can see that for the most part, the reinvested dividends, you're coming out right here, 2,000 into $4,722. So not too bad. Over 100% return, assuming dividends reinvested. And for the most part, you can see, at least for CONY, it's been a better option to reinvest your dividends. There was a period here, it looks like September of 2024, where just keeping the dividends in a checking account would have been a better option. That was also affiliated with a CONY price drop. But since then, CONY's recovered, and the reinvested dividend options has been a better option for you over the lifespan of this investment. But then the secondary question is, how would it perform in just owning Coinbase, the underlying stock? And as you can see, if you would have bought Coinbase clearly at $80 a share. Took that $2,000 and bought Coinbase at $80 a share, which we got like 25 shares. You can see right now you'd have an investment amount so 2,000 would have turned into 6,691. So clearly owning the underlying stock would have been a better option. That said, if anybody got into this with the assumption or the knowledge that Coinbase was literally going to go from, I guess if we go look at the price right now, I know it's dipped a bit with the current market volatility we're experiencing, but if we look at the stock price today, we're at 214. So if you would have predicted it going from 80 to 214, clearly any kind of return like that, you should go for the underlying stock. Although people buying these funds, I think, are looking for some of the income options associated with it. And even with capping your upside some, assuming you reinvested the dividends, or even if you didn't, you still had a pretty good performance owning this ETF. So I just wanted to break that down in case anybody was looking at it. I intend to do this for some of the other YieldMax ETFs in case you're interested. I know they're of interest to me. They allow me to see the differences for the investment options that one can make. So thanks for tuning in today.